I think we'll get going now. Good morning, everyone, and welcome to the 2020 annual meeting of Missoula Economic Partnership. I am Debbie Johnson, and I currently have the honor to serve as MEP's board chair. In all things 2020, I want to thank each of you for attending our first ever virtual annual meeting. And I would now like to call to order the business meeting portion of the meeting. I want to take a moment to thank each and every one of our investors in Missoula Economic Partnership. MEP's pursuit of economic prosperity for all in our community would be impossible without the investment of our organization, with all of your organizations. We appreciate your continued support and engagement with our team. For the business items today that we need to take care of, I want to call attention to a few of the features in BoomSet. If you want to make a motion, you can do so by using the chat feature, which is on the right-hand side of the video screen. And for the voting, we'll use the poll section. That's also just right of the chat. There are two options for each vote, yes or no, and all MEP investors are invited to vote on the motions that will be brought forward today. First up for approval is our meeting minutes of the 2019 annual meeting of Missoula Economic Partnership. I'd like to invite a motion in the chat right now to move these minutes. Motion, so over in the poll, I would call for a vote at this time. Looks like the votes are in and that motion passes. Thank you, everyone. At this time, I want to recognize our outgoing board members for their service to this organization. Kevin Davis has served for 3 years, and we've appreciated his voice for small business and technology on our board. Dirk Visser of Allegiance has been on the board for 10 years and is a founding investor, company, and board member who was instrumental in the formation of MEP. We thank Dirk for all of his service and dedication to our organization. The governance committee of the board is responsible for recommending a slate of prospective directors, and the entire board of directors is pleased to submit a slate to membership for consideration. This year, the board presents Annalise Settle of Lambros ERA, Jason Rice of Territorial Landworks, now IMA, Andrea Davis of Homeward, and Christina Henderson of the High Tech Business Alliance for consideration by membership. In order to vote for the slate of nominees, please use the poll function in the platform, and we'll wait a minute while people can record their votes for the slate. The slate of nominees is moved by majority vote. Thank you, everyone. At this time, I'll close the business meeting portion of the annual meeting, and I'd like to introduce Dean French, the treasurer of MEP, to give a presentation on the finances of the organization. Dean, take it away.
Good morning, and thank you for attending the annual meeting of the MEP. I'd just like to take this moment to thank the staff of the MEP for their remarkable work during these unusual times in pivoting this organization to really support the economics of Missoula, Montana during this pandemic. I think the work has been remarkable and very much appreciated by those of us leading organizations in the community. With that, I'd like to introduce Drew Riker, our accountant from JCCS, to present our annual financials. Go ahead, Drew.
Well, thanks again for having me today. What I'm going to do, just like Dean said, we're going to go through the annual financial statements for Missoula Economic Partnership for the fiscal year ended June 30, 2020. So the financial statements in question that we're going to go over is starting with the statement of financial position, more commonly referred to as the balance sheet, and then also the statement of activities. Some of the things I want to highlight today is for the statement of financial position, the strong cash position that we're at right now leading into fiscal year 2021. And then also just to illustrate a little bit more about the pledge cycle for MEP. And on the statement of activities, just want to illustrate some of the positive performance against the budget that we saw. Some, of course, was in the control of MEP, and some, especially in the cuts in expenses, were likely due to just COVID-related delays. So let's go ahead and jump into that statement of financial position, more commonly referred to as the balance sheet. And this displays our assets, liabilities, and then ending equity for the organization at June 30, 2020. So we're going to start with assets. Overall, total assets did decrease by about $193,000, mostly as planned due to the nature of operations being funded by the collection of pledges from investors. But two major movers that I'm going to talk about today that you'll see is the cash position and then also pledges receivable. So cash ended very strong at about $236,000, and you see last year we ended at about $80,000. So that was a $156,000 increase from last year. Now, a lot of this is based on, I guess, let me just cycle back to when we were at the beginning of this fiscal year, basically in July of 2019, based on the cash position that we had at that time, expectations of collections from pledges, and then also based on the budget, we expected the cash balance to be only at about $110,000. So ending at $236,000 is amazing to have that flexibility going into 2021. And we'll see really the reasons for that when we get to the statement of activities and we see the performance on the revenue side and, of course, the decreases in expenses against budget. The second thing that we had, major movers, is the pledges. Pledges decreased as planned by about $382,000 due to collections from investors. Of the ending balance that we have, which is $290,000, most is expected to be collected in 2021, about $195,000 worth, with smaller amounts being collected in 2022 and 2023. Now, this, of course, does not include partners who are going to be renewing their pledges for this next fiscal year, which brings me to my next slide that I want to just illustrate, which is that normal pledge cycle for MEP. So right now, MEP is really on the last year, what's typically a 5-year pledge cycle. The last pledge cycle started in really 2016, 2017, kind of crossing those years, where investors made the promise to give amounts in the future and then pay those pledges over typically a 5-year period for most investors. So we see that red bar representing your pledges receivable all the way down to the low that we have this year, which is very indicative of just the normal pledge cycle for MEP. So let's go ahead and move off of the assets and move into your liabilities section. I'm not going to spend a lot of time here because the great thing about it is MEP is very light on pledges. Just happy to announce that there's no balance on the line of credit and also no long-term debt, which is just amazing to see. Liabilities are really comprised of accounts payable and payroll liabilities. Now, they did increase by about $13,000 from last year, and that's primarily within payroll liabilities. If we think back to where we were last year, we actually had one less staff in place last year at June 30 compared to this year at June 30. And then also with the timing of when payroll cut off relative to year end, those two factors really contributed to that increase. The last thing we'll talk about on the statement of financial position is just your net assets or your equity. And that's really when we take our assets minus our liabilities, what are we left with? Now, overall, there was a decrease in equity of about $207,000, primarily due to the collection of those pledges. But let's go ahead and break this into your net assets with restrictions and those without restrictions. Now, with restrictions, really is just your pledges receivable. The reason they're restricted is because of primarily due to time. You can't use them until somebody pays them. And as I said, when we were talking about assets, your pledges did decrease due to just collections, normal collections. So we saw a big decrease there. However, we did see a very strong increase in your net assets without restrictions. Now, these are funds that the organization has discretionary control over, and it's not restricted by a third party or due to timing. And we saw when we looked at the balance sheet, the primary increase with your net assets without restrictions is due to that strong cash position, which is just great. So let's go ahead and shift from our assets to the statement of activities, which is more commonly referred to as your income statement. This, of course, shows the revenues and expenses of MEP. So let's go ahead and focus on the revenues for now. Total revenue is up $44,000 from last year and actually $252,000 over budget, which is just amazing. Now, we'd like to break this into operating revenue and then some other revenue that I'll mention. But within operating revenue, I'm going to focus on these three top categories, which is contributions, direct program income, and grant management fee revenue. And those are the three largest revenue line items for MEP. Now, contributions are down about $100,000 from last year, but they're actually up about $33,000 over budget. And the reason is because 2020 was not expected to be a big year for renewing investor pledges or new contributions. So still positive movement there against budget. Direct program income is actually at an all-time high at about $394,000, which is an increase of about $219 over last year, which is just amazing. Now, this is primarily comprised of amounts from the SBA Bioscience Grant, general program sponsorships from Missoula County and the City of Missoula, and then funding for specific initiatives and programs through the Missoula Redevelopment Agency and the University of Montana. Finally, grant management fee revenue we see is up $17,000. And the items that primarily comprise that amount are revenues earned from administering the Big Sky Trust Fund program, and then also similar services that are provided to Missoula County. Shifting now to expenses, and this is the last thing we'll look at before I send it back. Expenses are actually down $206,000 from the last year and down by about $58,000 from budget. Now, what we see here are the top 6 operating expenses of MEP, and these top 6 expenses really comprise over 90% of all expenses for MEP, so we're going to focus there. And the 3 areas that I wanted to talk about really are, 4 areas that had the most change is personnel, professional fees, rent, and then a little bit about donations. Now, first, within personnel, of course, personnel is the biggest expense of MEP, which is very similar to most nonprofits around the state. Personnel costs are up about $110,000 from last year, and this is primarily due to 2 things. One, as we mentioned, we have 1 new position that was in place all year during 2020 that was not there last year for the entire year. And then if we remember back, MEP operated for several months without a paid director position too, before grants hire. So some of those changes caused the increase from 2019 to 2020. Professional fees is up by about $85,000 due to some website enhancements and other programmatic consulting services that were provided to MEP. Rent, as we know, was up because of primarily the change in location, and just to note, the previous location was provided by First Security Bank at a reduced rate. So with the new location, we saw more of a market rate rent that was being charged. Finally, donations are up, and that's primarily a new line item or something that was reclassified from a previous area. But that's just comprised of that John Ruffato Business Startup Challenge and some money that was provided to the Montana Economic Developers Association for some projects that are being jointly provided there. So with that, the last thing I wanted to just point out here, these are 2 items that are non-recurring this year. The biggest here is that airline revenue guarantee payout that went out last year, about $400,000. I just wanted to make note of that because it's such a big line item that is not recurring this year too. So just in summary, that's what we have here is a strong cash position. We saw the decrease in pledges due to collections as we start a new pledge cycle. And then also on that statement of activity side, we just saw strong performance against the budget on revenue, and then some cuts on expenses that helped the organization stay ahead of the expenses versus budget. So with that, I'll go ahead and stop my screen and pass it on to our next presenter.
Drew, thanks so much for that really positive information and the great position that the organization is in financially to move forward into 2021. This past year has tested the organization's capacity to pivot without losing sight of our mission to expand prosperity and improve quality of life in Missoula. The COVID-19 pandemic brought with it unprecedented challenges, but this year has also seen many successes. We've had increased community engagement. Missoula County's average wage rose above $20 per hour for the first time ever. And when the pandemic hit, our team was positioned to immediately pivot to meet the critical needs and mitigate economic impacts of COVID-19 on our local business community. The staff at MEP has done an amazing job to dive in and really do the heavy work to help lift Missoula out of the pandemic-induced economic condition. And I thank each of them for their contributions this past year. I want to thank our investors again for making all of this work possible. Now I'd like to introduce Grant Kier, the CEO of MEP, to provide updates on our programs. Take it away, Grant.
Thank you, Debbie. And I want to just say a special thanks to not only Debbie as our board chair, but our entire board of directors for providing extraordinary leadership for our organization over the past year, but also as they have run their individual institutions and companies, extraordinary leadership for our community. I just am inspired time and time again by the willingness and the commitment of our business leaders, our political leaders, and our institutional leaders to always keep the greater community good in mind. And we are very proud and grateful for all of you who joined us today as investors and your commitment to giving back to our community and supporting our future through your investment in MEP. So today we're going to take a look back at the past year as we do in our annual meetings. I think most of us would acknowledge that this is going to feel a lot like 2 years, if not maybe 1 year in two parallel universes, one which we'd probably prefer not to be in. We will take a look at sort of our work pre-COVID, and then we'll take a look at our impacts and response to COVID. Both were really important work of the organization, and I think both are really helpful to us. Then we'll talk a little bit with Bryce Ward and let him come and present on the sort of state of our economy today and where we might anticipate we're going with COVID. We really like at our annual meetings to not just look back, but give people a sense of where we are today and what's possible and what might we expect in the year ahead. So one thing I think might be on your minds is why bother talking about what happened before COVID? Really, it's such a profound impact on our economy, and it really is defining the state of where we all are, maybe literally working at home today, and where we are as a community and certainly economically. But I think it's important for a couple of reasons. One, it tells us what's possible. You may remember, and some may not realize, that MEP was founded almost exactly 10 years ago this month. With the vision and foresight of community leaders who were responding to, at the time, one of the worst economic downturns in most people's memories, if not lifetimes. That idea of coming together to form MEP was about understanding how we could build a more resilient economy, how we could recover from having empty storefronts and people out of work in our community, and coming together to figure out how we could build a community and an economy that would take us into the future, provide for our children, and continue to protect the quality of life in the place that we all love so much. We feel like it's really important to figure out where we came in that last 10 years. When we share these details, I think you'll agree it was pretty remarkable what we were able to accomplish and where we were. The second reason we think it's important to talk about our work before COVID is because it sets our benchmark. We are absolutely determined and committed at MEP to be a major leader in the relief and recovery of our community economically. And we want you to know that we take very seriously where we were before COVID, because we have every intention of not just getting back to that place quickly, but getting beyond it as fast as we can. So I think it's important that we all celebrate, but also acknowledge what our benchmark is. And may none of us ever for a minute pretend to believe that what we are in right now is anything like a new normal. I think we can and should strive to do so much better than we are doing now. So I think it's always important to frame some of our work, because I think it helps maybe understand how we assess some of our benchmarks. And again, several years ago as a institution, and we invited input from the whole community, we really tried to understand what are those industries and sectors that perform well here, around which we have strengths we can build on. And we have determined, as a small organization with limited capacity, that the best way we can move the needle in a meaningful way is to really focus on our impact in those areas where we have best fit industries, to really try to promote those. One, because we are strong in those areas already and we have momentum, but two, because they do a lot to lift our community up and to really achieve our fundamental mission, which is to raise our standard of living, increase people's level of prosperity, expand prosperity while we protect our quality of life. So I think there's no better place to start that conversation and to sort of celebrate our success last year than to look at sort of what those industries do for our community in terms of the average earning per job. So as of the end of December of last year, those industries in which we focus most, we're paying on average $50,800 a year for average employees. The reason that we chose those sectors is in part because of the strengths we have as a community, but the other is that if you'll look at the overall average wage in Missoula County of $43,500, they exceed that by better than 15%. So as a collection, we understand that we need to be mindful of a resilient and diverse economy, but we also really want to put the effort in where we're going to see job growth in places that lift people up the fastest. I think it's really important to note something we're proud of and excited to celebrate is that as of December of 2019, for the very first time since the Department of Commerce has made the designation of high poverty counties, we were able to escape that title. So what that meant for us as a downside is that we were not able to apply for the same level of funding for some of our programs as we could have otherwise, and we have in the past. Nonetheless, it's a huge point of pride for us. We're excited as an organization, and we should be proud as a community to be able to sort of let go of that title of high poverty county. Time will tell what state we're in as we come through COVID and get back out again. But there's no question for us as an organization that is a label that we want to escape as quickly as possible again and maintain our status as not being a high poverty county in the future. So as many of you know, when we look at how our role as an organization, I think the thing that tends to get the most headlines is our business attraction work. Shiny and new companies, people who are looking to come here make for splashy headlines. But the truth is the vast majority of our work is helping those companies who are already here. We know for a fact that the best way to grow our economy, to continue to strengthen the strong culture we have of businesses who care a lot about this place and invest in their people, is to work with the businesses who have been here over time and to continue to support them to grow 1, 2, or 10 plus jobs at a time. So we're very proud over the course of the last year that we were able to support the creation of 130 new jobs by applying for funding through the state of Montana's Big Sky Trust Fund. This is seed funding to invest in a new employee with some of our companies. As you can see, we were able to help some of our bigger employers like ATG, a Cognizant company, apply for funding to support the growth of 34 new jobs. But even some of our small local manufacturers and science professionals were able to apply for these funds to add as few as 6 jobs at a time. We're proud and we remain committed to helping communities at all scales. And I think you'll see in this list on the right-hand side a diverse list of companies in terms of those industries we're trying so hard to protect. As a community in the last year, these industries in which we focus on, our priority industries and best fit industries, created 457 new jobs. So approximately 28% of those jobs, or 28% of the number of jobs created in these industries, were supported by the work of MEP through the Missoula County partnership that we have to acquire those Big Sky Trust Fund grants and reimburse employers for new hires in our community. Equally important to us as helping companies who are trying to hire today is our commitment to really understanding what the emerging trends are for the companies that we're talking to, and really trying to get ahead of the curve so that we understand where we need to be 5, 10 years down the road. One of the ways that we directly invest in those efforts is to seek planning grants through the Big Sky Trust Fund. So I'll give you 2 examples. We know for a fact, and some of you may be signed up for right now, our conference here later today, that the bioscience industry is one that has a lot of potential to grow and expand in Montana and also produces a lot of high-paying jobs. Time and time again, we've heard from some of our big companies in biotech that some of the things that they struggle most with are workforce and facilities. So this year, we've really worked hard in our partnership with the University of Montana and Montech to provide funding to do an assessment of Montech and what kind of demands there are for that facility, how that facility could be expanded or modified to allow some of the companies that are growing there now to continue to grow in place rather than having to look for new places to go, which could result in our case of companies leaving our community if they couldn't find the facilities that they needed here. So it's really about understanding something more than just job creation, but what they needed much further down the road. Another example of that is our investment in the Payne block. By making that investment, we have a seat at the table to try to define some of the future uses of that space. Some of the things that we've heard from companies is how important it is for us to have workforce and mixed-use housing downtown so that some of these larger employers whose staff and employees are so eager to be a part of our downtown culture have the ability to live and work very in close proximity, which is something that they're hearing from a lot of their employees they'd like to do. In addition, trying to understand how we can bring to the table in-place daycare so that some of the younger employees can continue to have families, stay employed, and be effective in the workplace and not have to leave the workplace when they have children. So looking at the ways that we can contribute to development patterns that help our community address some of its challenges and help our businesses identify the kinds of facilities and infrastructure that they're going to need in the future so that Missoula continues to be a place where great companies can thrive and grow and continue to be successful in the future. The last thing I'll point out on this front is a major initiative for us is our work around workforce. And that's a place where we spent a lot of time over this last year building partnerships and much, much deeper dialogue between our private sector and employers and between our educational institutions, including Missoula County Public Schools, Missoula College, and the University of Montana. And of course, chugging right along going into the new year, we were feeling pretty good about where we stood. As Drew indicated, we were in a strong position financially, feeling really good about the state of our community, and feeling like we had just a really bright future in front of us. And then the sort of rug got pulled out from every single person on earth in terms of COVID-19. And that was a moment where, as an organization, it was really important for us to completely rethink our role and our focus in order to understand how we could best serve our community, knowing full well that while we had a very acute medical crisis in the virus and in the pandemic, following very closely on the heels of this would be an economic crisis that if we didn't understand and reorganize around, we would provide, I think we would be remiss and failing in our role as an organization in the community. So what we have done for 2 years now is hosted monthly roundtable conversations of organizations who we partner with and who work either directly or indirectly in economic development or business support services. Those have been ways that we exchange ideas, understand trends, communicate what we're hearing in the business community, and make sure that as a team in our community, we're all sort of pulling in the same direction and understanding where our greatest strengths lie and how we can work to complement each other's efforts. When COVID hit, we realized that group of folks who had met regularly was a powerful team to build a set of resources around. And so with some discussions with Missoula County, we were asked to essentially use that team of people and our meeting space to develop Missoula County's Economic Recovery Task Force. So we have led that effort since March. And what that has included is hosting, at this point now, weekly meetings or up at least through the end of our fiscal year, weekly meetings in which we had anywhere from 30 to 50 attendees, anywhere from the governor's office and the health department, the city and the county, down to individual employers, banking institutions, financial advisors, and members of our collective community of economic developers and those who support our business community in various ways. Really trying to understand the trends and the changes that were happening day by day, week by week, reaching out to businesses and individuals across the community to understand what the impacts of COVID were for them, bringing that information back to the group, sharing ideas about how we could respond, and organizing the team to come up with the best strategies with subcommittees of that group to deploy outcomes and deliverable products to our community as quickly as we could to address the emerging needs of COVID recovery and relief at that time. So some, I think, examples we are most proud of, and I think I should take a step back and just reflect right now that I have never seen so many organizations work so hard together for a collective effort at any time in my professional life, let alone here at MEP. Every single member of that task force, and there are too many to name in this short meeting, has done an extraordinary job of participating, of providing value where they could, and letting others lead where others had something to offer. It really has been an honor to help organize and inspiring to watch our community of peers and colleagues come together to do that work. It's also been a huge honor to be asked to lead that effort, and we're really proud to have been asked by the county to do that, and really grateful to all of our partners to have allowed us to have that role. I also want to acknowledge that I've never seen, as the lead entity in that task force, I've been invited into, at times it was daily calls between some of our community leaders, political leaders, institutional leaders, business leaders, to try to understand what we could do as a community to respond, what was needed, and how we could marshal our resources quickly as possible. The level of communication and respect across the board in our community and the partnerships we saw between the public and private sector were things that all of us should be really proud of. And I hope things that I know we will be committed to try to bring forward, not just through our economic recovery, but absolutely in all of our practices as we move forward. Some of the specific successes along that way were, one, an incredible collaboration with Destination Missoula and United Way of Missoula to come up with Safer Missoula. Safer Missoula was our educational campaign to really try to understand how to take CDC, state, and local guidance and pull it into a format and a language that felt of Missoula and by Missoula, so that we could use our marketing ability and our messaging ability to reinforce the kinds of behaviors that we needed to allow people to get back to work, to behave safely, and to try to get our economy functioning as quickly as possible. We're really grateful to our partners in that effort. Another program that emerged out of the Economic Recovery Task Force was the BEAR Powered by program, the Business Emergency Assistance and Recovery Program. This was a truly exceptional effort out of Accelerate Montana, the College of Business, the Small Business Development Center, and some private business leaders in the community. We are so proud to be a part of this. This was really acknowledging that larger businesses had teams of people to help them navigate some of the really challenging CARES Act funding that was coming out, the PPP program, other relief packages. What we saw was that our smallest businesses, our mom and pop operations, didn't have those teams of experts, didn't have those relationships. So we were able to create essentially a hotline for any small business to get the help they needed to be prepared to walk into any of the lending institutions or funders to get the help they needed to move their business forward, whether that meant revising business strategies or just getting their ducks in a row to know what kinds of questions would be asked and what kind of answers they need to have to get through those programs as quickly as possible. And I would be remiss if I didn't recognize incredible leadership out of the Downtown Partnership, City Parks and Rec, Missoula County Public Schools, and the City County Health Department to really build these roundtable conversations to say, as we reopen, how do we take the expertise, the knowledge, and the experience of our business leaders, institutional leaders, so that the health department understands the impacts of their policies and their requirements, and that they can give the clearest and best guidelines to our business leaders and community members. And that dialogue really helped streamline and accelerate the pace at which we were able to reopen and the confidence people had when they started that reopening process. So really all of this was fundamentally based on some advice from Bryce Ward, who we had visiting with our members of our task force on a regular basis to give us insights into what was happening to our economy locally and nationally, and also some indication of where we might be headed so that we could be ahead of the game, anticipate needs, and try to be organized before people knew what they needed. He was really incredible at doing that. I'm going to introduce him here in a minute, but fundamentally our goal for that was to ensure that whatever relief existed, that we were able to drive Missoula's businesses to that relief as quickly as possible, eliminate barriers, and make sure that from small businesses to big institutions, everyone had equal access to the help they needed to get through COVID. We were really proud of the numbers. As you can see, almost 3,000 businesses were able to get help. As you can see, we experienced extraordinary unemployment. And as of recently, those numbers are looking even better than coming down to 7.3%. I think Bryce will talk about that more in a minute. And we were able to generate a lot of interest in, understanding of, and allow for access to the stateside CARES Act funding to support local businesses. I will say that as of just the end of last month, that grant assistance totaled actually almost $56 million. And as of last month, Missoula was leading the state in terms of our access to that funding. That tells us we've done our job of making sure people knew what was out there to help them and that they were getting the help they need. And I think we'll talk about this in a minute, but I think our numbers prove that that's helped us rehire people and get people back to work quickly, and in some cases, and according to the Department of Labor, faster than any other county in the state. So with that sort of status on where we are with COVID, I'll come back here after Bryce and talk a little bit more about the road ahead. But I'm both delighted and honored to have had the help of Bryce Ward over the last 6 months or so. He's been an incredible resource to Missoula Economic Partnership and indeed our whole community in terms of understanding where we are. We wanted him to be here today to provide everybody in our investor community with the kind of information that we've had, and to the extent that this is ever possible, some sense of where we are today, but more importantly, where we might be headed down the road and how we can organize as a community to get where we want to be in the future. So with that, I'm going to turn this over to Bryce Ward. Bryce, thank you so much for joining us.
Thanks, Grant. This is my 10th version of this talk in some format, and each of the 10 has actually been titled the same. I just changed the date at the bottom. It's basically where are we now and where might we be headed? And, the unfortunate thing is after 10 talks, I keep having to actually make a new presentation because where we are changes and where we think we might be headed changes. Since Grant was doing a big picture, I thought I'd start with the 20, 30-year horizon on Missoula's economy. And from the 90s, or from 1990 until the start of the Great Recession, Missoula grew pretty rapidly at a pretty steady pace. And then it went through this basically 3.5-4 year period of decline. And then it started growing again, kind of reaching new heights before, we reached this big dip at the end. And so let's zoom in on the big dip because that's what we're here to talk about for the most part today. And so here, takes the same measure, non-farm employment, but we're going to index it to last August. And you kind of see it was kind of growing a little bit between August and February, but not a ton. It falls off a cliff into April, and then it bounces back. And it's bounced back at different rates in the U.S., where you kind of see this, initial bounce back, but it kind of keeps slowing down. Montana had a, starker bounce back, but it's also kind of slowed down in the last few months. But Missoula, at least according to these data, has bounced almost entirely back, which seems surprising. But if true, obviously, then I think Grant and everybody in the community deserves a lot of credit because amongst all metro areas, Missoula ranks in the top 15 in terms of where it is relative to where it was a year ago, or total year-over-year growth in employment, and that's kind of remarkable. Before we get too congratulatory, there is an odd finding, which is that if we look at our unemployment rate, it's still elevated. In fact, it's almost double what it was last August. I kind of see the same patterns in Montana and the United States. But, the most recent data from Missoula suggested that our unemployment rate was 5.4%. Last August, it was 2.8%. So how can we have all of our employment recovery and yet still have an unemployment rate which is doubled? Makes me scratch my head a little bit. So, if you start unpacking the data and you dig into it a little bit, just mechanically, unemployment rate is, number of people looking for jobs divided by number of people in labor force. If the number of people who have jobs is basically stayed the same, the only way that you can get to more unemployed is to add more people to your labor force. And somehow, magically, we added almost 2,500 people to our labor force in June. That's 10 times larger than any other May to June change over the last 30 years. And ultimately, these numbers are derived from estimates. They are not derived from hard surveys of Missoula County or the Missoula MSA. And so my guess is that Missoula is suffering from a little bit of a data quirk. I don't know. Maybe we have fully bounced back. Maybe that's all these stories that we've heard of people fleeing the cities and they've all come to Missoula. It's hard to say with certainty. So what I will say is, look, we're going to have to wait for better data to know what's really happened with unemployment and employment in Missoula. It seems fair to conclude that we've probably done better than most parts of the United States, but exactly how much better and how we're going to do going forward, because obviously up until recently, we haven't had really high COVID levels. That remains uncertain. So we'll have to wait and see. But right now, the picture is reasonably good, at least from the official employment data that we have. But there's other data that's telling us that, there might be some adverse impact, at least at the Montana level. We don't have these data for the Missoula level. But if you look at the small business pulse survey that the Census Department has been running, 2/3 of Montana businesses say that they've reported at least a moderate negative impact due to COVID. Now, that's less than the 75% that we've seen nationally, but it's still obviously 2/3 of businesses. In recent versions of this survey, they've asked people, how is your operating capacity, i.e., how much you could produce at maximum relative to a year ago. And, half of businesses, both nationally and in Montana, say that their operating capacity, their ability to produce is less than it was 1 year ago. And half of businesses, are still somewhat pessimistic. They think it's going to take more than 6 months for their output levels to return to where they were a year ago. So, while the employment data look pretty good, there's at least some pessimism at the small business perception level. And there's also, certainly evidence that, at least some households are struggling. Again, fewer in Montana than nationally, but 18% of Montana households expect someone in their household to lose income due to COVID in the next 4 weeks. 7% say they haven't had enough to eat. 5% are housing insecure. And 25% say they've had more difficulty than usual paying for their expenses. So, those obviously we would like those numbers to be much lower. So it seems fair to say that COVID has had an adverse effect on our economy. Missoula and Montana appear to have suffered less, at least thus far, than most other places. But it seems fair to say that we're not where we want to be, right? We would like there, to be growing employment, fewer households suffering, fewer businesses reporting that they're pessimistic or that they're suffering capacity losses. So where might we be headed? And obviously, that's a huge unknown. That depends on what happens with public health. It depends on what happens in other parts of the economy. It depends on national and global economic policy choices. It depends on whether the pandemic is actually leading to fundamental changes in what people want in terms of the goods and services they consume, where they want to live, how they want to work. So ultimately, nobody really knows, and I'm not going to pretend to tell you that I know what's going to happen. But it's useful to understand a few big things about what's happening with COVID and with the recession that's surrounding COVID that will kind of help us understand, at least some of the forces that are likely to shape where we're going to end up. So a few things to understand about this recession. First is that it's deep, right? So obviously we had a huge collapse and we've had a big bounce back, but where we are now is still well below, in terms of employment losses nationally, where we reached at the trough of the Great Recession. So that's obviously a big problem. Second problem is that the pace of recovery is slowing, right? So economists are starting to call this the reverse square root recovery, right? Which is we had a big fall when everything got shut down or people really, whether officially or not. And then we had a kind of a quick bounce back as things kind of started opening up, but we've seen a much slower progression. And if you just take, and this is the simplest forecast possible, just say, look, if we grow at the rate that we grew last month, it'll take us until basically the end of 2022 to get back to the levels that we would have been had we not undergone the COVID recession. And, that's a super naive forecast. I think, said this week, several, private forecasters put out their forecasts and they're projecting, something similar in terms of employment not recovering even to the February levels, actually, until probably the end of 2022. Again, that's nationally. Here in Montana, we have done better. Maybe we'll follow a different trajectory. We'll have to look at a Montana level forecast at some point in the future. But the pace of recovery is not this V-shape, that we may have seen in Missoula, at least not nationally. And that's going to create some drag even for Missoula, even if we have, recovered fully. The other weird thing about this recession is that it's services led, right? So basically this graph shows the decline in employment and you can see the drops and those are all the recessions. And the blue line is goods. And so basically every recession since 1970 has been predominantly a goods-led recession. This recession is different in that it's a services-led recession, right? We're seeing much bigger declines in services and actually fewer declines in goods. In fact, spending on durable goods is actually up over the course of this recession. So, while that basically means that we have less ability to actually kind of project how we're going to come out of the recession, because what's leading us into the recession is very different. And I don't know exactly what that's going to mean going forward, but it's worth understanding that there's going to be some differences in terms of how we come out, because of how we've gone in is very different than we're used to. And kind of related to the fact that this is a heavily concentrated in services, is that it's very unequal, right? So job losses amongst people with the lowest earnings are much, much higher than job losses for people with the highest earnings. Now, depending on what metric you look at, there's certainly still some drag amongst high earnings, and there's some drag in work from home occupations, but there's huge concentrated job losses amongst people who are low wage service sector employees. And that's going to have some consequences for what policies are appropriate and what our trajectory out of recovery might look like. So ultimately, as we look forward in terms of how are we going to get the economy back on track locally, statewide, nationally, and globally, there's three key things that I've emphasized in every talk, and that economists keep emphasizing. We need to beat the virus. There's no economic health without public health. We need to support demand so that people who are losing income as a result of the recession are able to continue to consume goods and services, as well as consume goods and services once they're allowed to. And we need to make sure that our capacity to produce goods and services is preserved, or in the case that preferences are changing, we're adapting to where we think the economy might be once we beat the virus. So let's go through each of those in a little bit more detail. So just a reminder, COVID is bad. So my preferred metric in terms of how bad is it is to look at excess mortality, not official COVID deaths. And excess mortality basically just is a real simple calculation. It says how many people have died this year relative through the same point last year, or the average of the last 5 years, and how many more deaths have we seen this year. And so that's what this graph shows. And the red is kind of relative to the maximum year of recent years. Blue is relative to the average year. The black is the official COVID deaths. And so if we look at excess mortality, we've seen somewhere between 300,000 and 400,000 additional deaths in the United States for people over 18. That means that mortality is up about 20% over recent years. That's a lot of excess death, right? And we add in the fact that COVID appears to have long tail effects in terms of some people have it for a long period of time. This is something that I think a lot of people are rightfully afraid of. And as long as people are afraid of getting this virus, the economy is not going to recover because people are going to continue to not go out to and do activities that they used to do because they are afraid of contracting the virus. So how do we contain the virus so that we can allow people to do more and improve the amount of both social activity but also economic activity that we all get to engage in? And the public health vision remains the same as it was when I gave the first talk back in March. We need to find the infectious through testing and contact tracing, and we're building testing capacity, but probably not as much as we would like. Our contact tracing remains kind of okay-ish, but it quickly gets overwhelmed when cases spike. We need to prevent transmission of the infection. So once we identify an infectious person, we need to isolate them, or we need to have a vaccine. So if I interact with somebody who's infectious, it's less likely that I contract it. But until we can better identify, isolate, or vaccinate, we need to keep going with what people are starting to call safety lasagna, which is a bunch of layers of things which are designed to reduce transmission, right? Reduce the number of interactions you have with people. If you interact with people, reduce the number of interactions that are between maskless people in close proximity and poorly ventilated spaces. So we have to keep doing that stuff to continue to contain the virus, and we probably need to do a better job than we've been doing recently. And the last thing we want to do, of course, is reduce the harm so that if I get the virus, I'm less likely to die or suffer long-term consequences. So we've got a ways to go on containing the virus. We actually did, at least up until recently, a pretty good job in terms of supporting demand, at least at the aggregate level. Right? So this graph shows personal income in the United States by month. The blue line is kind of what happens excluding government transfers, right? So personal income went down by a lot, and it still would be down by several percentage points if we just were looking at wages, salaries, proprietor income, interest, dividends, and rent. But when you add in government transfers, actually personal income has risen, and it spiked a lot in April when the CARES Act and the $1,200 payments went out. But it's been slowly drifting down, and it's particularly starting to drift down after July when the enhanced unemployment insurance ran out. So, while we have done a decent job of supporting demand up until now, and we have a little bit of a runway because of the spike in income that we've seen thus far, that runway seems like it's running out, and we might start seeing adverse demand effects just due to lost income. So ultimately, I hope that Congress will figure out ways to help us support demand to keep the economy moving forward. More importantly, though, we're certainly losing capacity. Now, how much capacity we've lost locally is uncertain. But nationally, we've seen business closures through July. 7.1% of small businesses, or 420,000, had closed permanently. We're seeing a transition from, initially a lot of the unemployment spike was what we were temporary unemployment. People expected to be called back, but we're seeing underlying these lowering unemployment rates are a transition, and more people actually shifting into permanently unemployed. So if we just look at permanent unemployment, it's starting on a trajectory and towards a pretty bad recession. Labor force participation has declined. For men, it's down a couple of percentage points, but women, particularly as we got closer to the school year, we've seen a decline in labor force participation of women, and that's heavily concentrated in women who have young children. So that will take some time for us to recover from. We've got long-term learning loss of capacity due to learning loss, right? Kids are learning less. So the one study that looked at actual test scores found significant declines in all tested subjects. And according to the Household Pulse survey, about 40% of people who plan to take some form of post-secondary education this fall have canceled or reduced their classes. Health and mental health is a problem. People are avoiding going to the doctor, putting off care. And now over 50% of respondents to the Household Pulse survey are reporting some symptoms of anxiety or depression. And, those are all human capital factors, but there's also social capital factors, and trust in everything has eroded. There's a survey that's been kind of gone every month nationally, and he asks a whole bunch of stuff about government and people and scientists. But basically, if you look at this chart, while some levels remain high, everything is trending downward, right? And this is going on in a background of a highly polarized environment where this scary finding was put out last week, which suggests that roughly a third of Democrats and Republicans now believe it is justified to use violence to advance their political goals, which is quite terrifying from people who want to have a stable society and want to have a growing, thriving economy. So ultimately, while these data don't precisely describe changes that Missoula has faced or will face over the next year, we certainly need to start figuring out how we're going to mitigate this lost capacity. And we also need to start to figure out how to plan to adapt to potential changes in preferences. And the obvious one here is remote work, right? If remote work really is more feasible, and look, there's a big question about how much that is. Certainly people like it. Whether or not businesses can make it work is an open question. But to the extent that there is even marginal changes in remote work ability, that fundamentally changes some of the economic forces that drive and shape regional economies. And so Missoula will need to start to understand, how much of remote work do we want to attract? How much are we likely to attract whether we want to or not? What are the spillover costs associated with that in terms of rising housing prices or greater congestion and reduced quality of life? How do we build infrastructure, and what's it going to do to our taxes? And so certainly these are big questions, and that's just one example that I think we're going to need to start to think about as we start to get some better instincts about how preferences might change. And with that, I've gone over my time, so I'll stop there.
Bryce, thank you. I think we're all too familiar with change right now. I think if you take nothing away but reverse square root recovery, you've taken something from this talk. But it seems to me this is obviously an incredibly challenging moment for us as individuals, for us as a community, for us as a nation, and for the world. The first thing I want to do is just say thanks to those of you who came today, because in the face of many, many challenges, for you to take time out of your life to be part of this conversation is generous of you, and we're grateful for you being here. Bryce, I really appreciate you sharing some insights into sort of where we are. We have been scratching our heads over that same number that you shared at the beginning in terms of higher than in the past employment and higher than in the past unemployment, and trying to reconcile where those extra people are coming from. We'll look forward to working with you over the next few months to wait till more data come out to see if it was a glitch in the data or if there are real numbers there and we're just exploding with new people. It seems to me going forward, we know things are going to get harder before they get easier. We know that this is a difficult time. Nonetheless, I think we as an organization, and I personally am very optimistic about our long-term future at Missoula. I'm optimistic because, one, we know what's possible. Watching what we've accomplished over the last decade since the last recession, we know where we know how to recover better now. Two, I think we are seeing unprecedented collaboration within industries, across sectors, and between the public and private communities and institutions in our community. And frankly, even in Congress, as hard as it has been to watch politics lately, let's remember that we did get a CARES Act and the PPP program, and we got them in weeks. And I think hopefully after the election, we can continue to apply pressure and see those kinds of rapid responses. And we've seen unprecedented adaptation in our business community. I think folks saw one of our grantees of the Big Sky Trust Fund was a group called Coaster Cycles. We've been delighted to be a part of bringing them to Missoula and watching them grow here as a manufacturer. They were one of the quickest and most effective at pivoting their organization from manufacturing pedicabs and bicycle pedicabs to developing PPE that they were distributing to hospitals and selling to hospitals here and nationwide. And they did that, and they were able to bring back their entire workforce from the 2 weeks they were off. And now those folks are now adapting back to their traditional manufacturing techniques, which is exciting. The last thing I'll say is we see really strong signs here for the future. You may have seen the article recently that we are seeing a ton of interest in the future of developing in Missoula, the kinds of development we need here if we're going to continue to grow and support our economy, but also protect our character and quality of life here. We are going to need commercial spaces for our growing companies in our urban areas, and we're going to need workforce housing. We need developers and investors to see Missoula as a bright spot on the map, to make those investments so that we can continue to thrive. And we're seeing that now. That is optimistic for us. We're seeing big national organizations who are struggling in markets everywhere celebrate the market of Missoula, with Alaska Airlines announcing that next year they're going to have direct flights to San Francisco, San Diego, San Jose, and LA. That's a huge investment for them. That is a strong signal that they believe in our community's future, that the investments we're making at the airport are effective. And we are seeing unprecedented partnerships in workforce right now, in our workforce development and education, and the conversations we're having between our business leaders and our educators. And we are keenly aware that the big challenges, once we get through, and I suspect that it will take a while, but eventually we will get through this health crisis, workforce housing and childcare are the things that are going to limit our economic growth, our quality of life, and our standard of living here. And I think we're seeing huge signs of progress in all three of those areas. So for us as an organization, we're going to continue to focus over the course of the next year, dividing our time between COVID response and relief, trying to be very effective and responsive at understanding what our businesses need and advocating on their behalf to community leaders, to larger institutions who can support our recovery, as Bryce described earlier. We're going to be working on these bigger issues of workforce housing, childcare, and we're going to continue to be reaching out one business at a time, 50, 70 businesses at a year, to understand how you are growing or not growing, what we can do to support you, and to continue to be an effective agent in helping our businesses and our community be successful, not just in the year ahead, but for decades into the future. So None of this is possible without your investment. None of this is possible without your participation. I want to close with just a huge thanks to our board of directors, again, for their leadership, for all of you as our investors, for your belief in us, for your investment in us, and for your dialogue and helping shape the way we move going forward. And with that, I just want to thank you again for joining us today. And we'll wrap up here for our annual business meeting.